The fourth learning objective is to journalize and post sample transactions to the ledgers. In Transaction 1, we see that Smart Touch received $30,000 cash on April 1st from Sheena Bright and issued common stock to her. The business deposited the money in its bank account, as shown in the text, in the following deposit ticket. To post the transaction, the amounts are transferred to the appropriate T account by debiting cash for $30,000 and by crediting common stock for $30,000. In Transaction 2, we see that on April 2nd, Smart Touch paid $20,000 cash for land. The purchase decreased cash, therefore we credit cash. The asset land increased, so we debit the land account. In this transaction is also posted to the appropriate T accounts. Cash and common stock each have one transaction posted to their T accounts. Therefore, that amount is their current balance. Now post the new transaction. We debit land for $20,000 and credit cash for $20,000. To determine the balance of cash, use the rules of debit and credit. Since cash is an asset, the balance is calculated as plus $30,000 and minus $20,000, and that equals $10,000. The balance in cash after the two transactions is $10,000. In Transaction 3, Smart Touch purchased $500 of office supplies on account on April 3rd, as shown on the purchase invoice provided in the text. The account means to charge it to an account and pay it later. To post the transaction, the amounts are transferred to the appropriate T accounts by debiting office supplies for $500 and crediting accounts payable for $500. In Transaction 4, we see that on April 8th, Smart Touch collected cash of $5,500 for service revenue that the business earned by providing e-learning services to its clients. The source document is Smart Touch's sales invoice in the text. Debit cash for $5,500 and credit service revenue for $5,500. The rest of the transactions are found in the text. The ledger accounts, after posting all the transactions, are shown here and on page 79 in the textbook. In short exercise 2-10, you are asked to prepare a trial balance. Oakland Floor Coverings, Incorporated, reported the following summarized data at December 31st, 2012. Accounts appear in no particular order, but this is an important thing to keep in mind. We've mentioned before that it does, on the trial balance, need to go in the order of assets, liabilities, owner's equity, revenue, and expense. So it's important to take this unordered data and remember that it has to be ordered in a specific format. This is the format preparing for a trial balance. The first thing you're going to do is prepare the heading. It's always who, what, when. So we have Oakland Floor Coverings, trial balance, December 31st, 2012. We put the accounts in their order of asset, liability, owner's equity, revenue, and expense. So we begin with cash. Has a debit balance of $12,000. We have equipment with a debit balance of $45,000. Accounts payable with a credit balance of $2,000. Other liabilities with a credit balance of $18,000. Stock or common stock, a credit balance of $22,000. Revenue, a credit balance of $34,000. And expenses, a debit balance of $19,000. The whole purpose of the trial balance is to make sure that the debits equal the credits. So now we're going to add the debit and credit columns respectively and make sure that both sides balance. And in this case it does. It's $76,000 on both sides. In short exercise 2-9, we post the journal entries from a previous exercise to T accounts. Cash is a debit of $29,000 and will be posted on the debit side, $29,000. Common stock, a credit for $29,000. Medical supplies, debit of $14,000. Accounts payable, a credit of $14,000. Notice they're going on the correct side of the T account. Rent expense is a debit of $2,600. Cash is a credit of $2,600. Next slide, accounts receivable is a debit of $8,000. Service revenue is a credit of $8,000. Now we need to find the balance of each account, and we need to denote it as balance, or just an abbreviated BAL, indicating that's the balance of the account. Cash has a balance of $26,400. We simply use the rules of debits and credits. The $29,000 is a plus, the $2,600 is a minus. When we find the difference between the two, we have a balance of $26,400. Accounts receivable, a balance of $8,000. Medical supplies, balance $14,000. Accounts payable, balance of $14,000. Common stock, balance of $29,000. Revenue, a balance of $8,000, and rent expense, a balance of $2,600. In this exercise, S2-9, we're preparing a trial balance. We need to make sure that we have the proper heading. It always goes who, what, when, so we have Ned Brown, trial balance, January 3rd, 2012. Now we're simply going to go down the list and write the account title and its balance. The debit side goes on the left, the credit side goes on the right. So cash has a balance of $26,400, accounts receivable $8,000, medical supplies $14,000, accounts payable $14,000, common stock $29,000, service revenue $8,000, rent expense $2,600. Now remembering that the purpose of a trial balance is to make sure that the debits and credits equal, we're going to add both columns to make sure they equal, and they do. $51,000 on both sides.